Welcome to the Jill on Money Show. It's Monday, December 11th, and we are here trying to help you make better financial decisions, help you do some year-end planning, help you maybe even do a big, great money reset. I've been talking to a few people who've been resetting. A friend of the show, I had dinner with him last week, and I thought he was going to do this big. He blows out of his old corporate job. Very, very successful dude. And I think he's going to just, go find himself. Lo and behold, he's going back to like another high paying job at a big company. And I'm sort of disappointed. He's like, I don't know. It seemed like a lot of work to reset. And so his reset is basically, it's a regression back to a previous job. But okay, he at least went through the process and thought about it. It's just that he decided didn't want to do it. Sometimes we have this fantasy, I'm going to go into business for myself. Oh, my wife and I, my husband and I, we're going to do this and then you really start getting to the nitty gritty and it's maybe harder than you would like. So if you're contemplating big changes, give us a holler. Go to JillOnMoney.com, click the contact us button. Let us know if you would be willing to come on the air. Today, we are joined by Janette, who's on the line from Idaho. Hello, Janette. What is going on? How can we help you?
Hello, Jill. I'm doing great in Idaho. I lost my mother in January, and I have an amazing sister who worked through the entire process for us very quickly. Mm-hmm. But my mother left an estate that was mostly stocks and with a financial planning firm. Mm-hmm. And so we had 57 stocks that we just split evenly amongst the siblings.
Oh my God. Okay.
So basically she had her own mutual fund is what we'd like to say.
Yeah. She's Warren Buffett.
I stayed with the financial planners. And then the day that I signed over all of my information, they sold all of the stocks and put me into 15 different ETFs. 15? Yes.
Wow. Okay.
So I don't really understand ETFs, but I do understand stocks. And I was trying to get information and it just wasn't working out. So I left them.
You broke up with your brand new financial planner. It was a shotgun wedding. It is now gone to divorce. It's like you went to Vegas, you broke up. You got married and divorced in within a year.
Absolutely.
Okay. Where's the money now?
It's still in the account. Mm-hmm. It's with a Schwab, so it's all mm-hmm. in there together. Mm-hmm. But I don't know whether or not I should stick with these 15. It seems like a lot of ETFs.
Yeah. A couple of things. I just want to let me go back in time for 1 second. Mom passes away, and she passes away in January 23. So what happens at that time? These stocks were just held in an individual account, or was it a trust account?
It was a trust account.
Okay. Because they were in a trust, does that mean did you get a step up in cost basis on those stocks?
No, because it was an AB trust.
Okay, I got it. Mm-hmm. Okay. So when those stocks were sold, was there a tax event?
Yes.
What is your capital gain for this year on that?
It will probably be about, it's not terrible. It's probably about 20,000.
All right. That's not good. Because I just got scared that somehow you had NVIDIA in there and, it was sold and you know what I mean?
Right.
All right. So $20,000. And is it short-term gain or is it long-term gain?
Almost all of it was long-term.
Okay, good. So now on these ETFs, 15 does seem like a lot. If you like stocks, you probably can really understand what these ETFs are really all about, because essentially an exchange traded fund starts to look and smell like a stock, meaning that you can buy and sell it intraday. But it is usually, and I'm thinking this is probably what the advisor did, is usually an index exchange traded fund. Some of them are actively managed now, but hopefully this is mostly index. Now, it could be that we could cherry pick some of these exchange traded funds and see if there are any losses associated with them. Are there any losses on any of those 15 funds?
I already cherry picked a couple of them, mm-hmm. and that's the reason why the capital gains is lower, because mm-hmm. I did do that already.
Okay, so you sold some, and you're still left with 15?
Correct.
Okay. How much money total is in this account?
About 400,000.
Wow. Okay. And Janette, tell us a little bit about you. How old are you?
I'm 66.
Are you working still?
I am not. We left our jobs about 10 years ago. So,
Oh my God. This is the husband, the Idaho potato.
yes, my Idaho
Okay.
potato, yes.
And how old is he?
He's 73.
Okay. And what is the source of your income right now? Do you pull Social Security for him?
Correct.
What about for you?
I'm starting my Social Security next month, but he has a good pension for here. He has a good pension. We live off his pension and Social Security easily.
Oh, you can?
Yes.
Wow. So how much is that? Social Security plus pension, add in your Social Security. What will that be on an annual basis about?
I know what it is on a monthly basis.
All right, give me the month.
About 8,500.
Okay. And you say that's plenty for you guys, right?
Yes. Yes.
Okay. Do you have any other investment accounts besides this 400,000 from the passing of the mom?
From my mom, she has a small inherited IRA.
Mm-hmm. How much is in there?
About 15.
Okay. And what about your own retirement accounts? What do you have?
We have about 200 in Roths.
Mm-hmm.
And about 150 in traditional IRAs.
Okay. And that's the investments, right?
Correct.
Okay. And what about money in the bank? Boring.
We have about 10 months of emergency money. So about
fantastic. When you guys moved to Idaho, did you buy or rent there?
Oh no, we built a house.
Oh, look at her. Oh no. We have a moose on the wall, a door in the cabinet. Okay. How much is the house worth?
It's about worth 450.
Is there a mortgage on it?
There is not.
Okay. So you guys are living large. And so really the essence of this question is, what do we do with this account and how do we manage it to make it easier for you? Right?
Correct.
Okay.
Correct.
So here's the general way that I think about exchange traded funds. You need to have a U.S. stock exchange traded fund, right? You need to have an international exchange traded fund. You maybe even want to have maybe a small international bond fund, maybe a U.S. bond fund. Beyond that, I don't know why there's 11 more funds than that. I mean, maybe is there a precious metals or a real estate or any sort of commodity based fund in there?
No. I did a percentage and
tell me
27, about 27% is in a muni bond fund. 28% is in 4 different S&P funds.
4?
Yes.
Okay. Well, let's pick one.
12% is in a global fixed fund. 10% is in emerging markets. 8% is in high yield index. 6% in value index. 6% in a Dow and 2% in a NASDAQ.
Okay. So those last 3 you can sell. Those can be done. In the 4 in the S&P, are these like, there's one that's S&P large cap, one is S&P 500. Like, what are those 4 funds?
There's SPY is one of them.
Yep, SPY, which is good. That's the S&P 500.
And then I have 2 that I have no idea what they are.
Okay.
So I'm probably going to get rid of those because I just don't understand them at all. They're like power S&P 500 funds.
Oh my God. Okay. So these are these strange new exchange traded funds that are trying to almost be like an index annuity. Mark, if you look this up, is fascinating just to see how they're marketing it. It says it seeks to track the return of the S&P 500 up to a predetermined cap while buffering investors against the first 15% of losses. Now, what's fascinating to me is that this is like a fund that is completely unnecessary. It has an expense ratio of 0.79%, versus your SPY, which is like 1 basis point, I think. You don't really need this buffering and protection. Like, you might want to put some more money in a bond fund or have some money in treasuries, but like this is like over complicating a situation that should be fairly simple. Silly, not necessary. So whatever those power silly things are, let's get rid of those. don't hate me. Maybe we should wait to do it till next year. Do they have gains just because of the timing of it all?
Correct. I absolutely will wait until the beginning of next year.
Okay, good. Is there anything that has any like, is the emerging markets down?
A little tiny bit.
Good. Get rid of it.
Okay.
Get rid of it. And the global fixed?
I think that it's like even.
And then the muni should be, I probably went down then up. So it should be probably okay.
It's pretty much even. I actually sold out some of that muni just because I had so much of it.
But I don't get something. Dumb question. What's the state income tax in Idaho?
It's 6%.
I don't know. Like, do we need a muni ETF? Because like, look, you're going to have income of $8,500, right? Maybe you're just fine getting a intermediate term bond fund or bond ETF and not, I have to look at the tax equivalent yield. You're just not in that high a tax bracket. Like you're in 22%. Big deal.
I'm actually in 12%.
How is that possible? You just told me you're going to have $8,500 a month of income.
Right. Part of it is non-taxable.
There's no way you should have that then. Okay. So like, let's be clear, get rid of that. That's silly. 12%. Why you would ever be in a muni bond fund is nuts.
Don't ask me.
Oh my God. This guy really, or girl, did a real number on you. The money is at Schwab. Are you more comfortable in just an index fund environment? You're not actively trading this crap, right?
Correct.
If you want to, you can just buy a bond fund. If you want to stay with ETFs because now you've learned about them and you can certainly do that. But I just feel like you're going to be so much happier if you could make this a more manageable process. Like if the $400,000 account had 4 ETFs or, 4 different positions, maybe 5 if you include the money market, right? Then like, great. You don't need this money anyway.
Right.
And so it's growing and I don't mind that there's like, I don't mind that it's like a 60-40 portfolio. It's just that like, it's just so cumbersome. I just don't know why they did that to you. Is there anything else that's kind of funky in all of this that's like worrisome to you or what? What do you think?
One of the kickers is that they also put me in the small lending funds, real estate company lending.
Yeah.
That's about $50,000 and they're very difficult to get out of.
Really?
Yeah, they only trade a couple of times a year.
What? Why did they do this? I'm not going to like belabor this. You're in great shape. You know that, right? Because obviously your Social Security and your pensions. You were just cleaning this up.
Correct.
Do you guys have kids?
We do.
Okay. So don't do this to your kids, right? Do you have your estate documents done?
We do.
Okay. Is there anything else that we can help you with at this point? Are the Roths and the traditional accounts that you have at Schwab as well, or you have them somewhere else?
Because we sort of rolled them we use them on and off to build our house. They are in just a money market at a credit union. I'm going to be investing them back in next year. Okay.
All right. Do you need since they're already in cash, the Roth as well is in cash?
Yes.
Well, get that done. Obviously, if you're still in the 12% tax bracket next year, even with these moves that we're going to make, as long as you're in the 12%, take as much money out of the inherited IRA that keeps you in 12%. I don't know where tax brackets are going. I just love that you're in 12. So I want you to take as much advantage of that as you can while you're still in it.
Sounds good.
Don't eat too many potatoes. Enjoy your investment management job. This is your retirement career. And let's clean it up. And if you need any other help, we are here for you. Okay?
Okay. Thank you.
Whew, man, you people in the business, 15 funds? Really? It's just so unnecessary. Like the dude's going to get paid the money, right? Just take care of your client. You don't seem smarter because you chose 15 funds. Maybe it's like they work for a big organization and it's like the model. Perhaps that's why. But even a model, I need 15. I don't know. All right. If you are like Janette, you're confused. You have too many positions. You want some help cleaning up. You want to figure out when you should sell things. We are coming up against the end of the year. And so this is a good time to think about it. And also, like, if you're thinking about gifting, for example, I'm going to gift some money this year, maybe you gift some next year. Mark, I had a great conversation with somebody, like one of these anchors, and right before I was about to go on the air, they're like, oh, I just have a question to you. Like, I'm now putting like $2,500 a month to my bust out nephew's via Venmo. I'm like, well, did you file a gift tax return? Oh no, what's that? You can't just give people money. You know, it's like there's a limit. You can give $17,000 this year and you can give $18,000 next year. But if you give more than that, you can give it, but you have to file a gift tax return. Ay, what are these people all thinking? Check in with us. We're going to keep you on the straight and narrow, or at least the narrow. I don't know how straight I could be at this point in my life. Subscribe to us on the Odyssey app, wherever you find your favorite podcasts. I'm glad I made you laugh. Lift someone up, change your work, change your wealth, change your life. Thank you for listening. We'll talk to you tomorrow.